Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 14th of October. Already halfway through October. We almost are. It's unbelievable. Let's get into what we are looking at today. We're going to talk a little bit about the Canadian dollar. We're going to talk about canola. We're going to talk about soybeans. So stay tuned. We have a good show for you today. But first, let's get into what happened in markets today. Canola was up $8.20 to 615.60. Minneapolis wheat was up 2 cents to 553 and a half. Kansas wheat was up 7.25 today. Good day for Kansas wheat at 488 and a half. Chicago wheat was up 3.5 at $5.25. Soybeans were down 1.25 today at $10.06.5. Corn was up 2.25 today at 413. Bean oil was down marginally today at 50.7 cents per pound. Canadian dollar continues to fall down to 71.20 at this time. Live cattle and feeder cattle both made new highs today. These markets are just on fire. 246.50 per hundredweight for live, 381.32 for feeder. All right, if you haven't subscribed to the channel, please do that now. We appreciate every subscriber, and we'd love to have you in the family, so to speak. So click that subscribe button. But first, or now we'll get into the Canadian dollar here. I want to start on the Canadian dollar just because it's becoming very interesting to me how weak the Canadian dollar has become. This is a relatively close, like 6-month look at the Canadian dollar. And as you can see, we did see new lows today in the Canadian dollar. It did kind of push back up during the session so far today. I mean, this was shot this afternoon or screenshot this afternoon while the market was still trading. But you can see we kind of got almost right down to that 71-cent mark today. We may, this momentum may break it down below 71 cents. We might get a 7-0 handle in front of that thing just to kind of pull back a little bit as to where, this support area that we had in April and May was broken in the last couple of days, continuing to signal that there's even some technical breaches of support here that it broke last week. It broke support of the 200-day. And then in the last couple of days, it broke the previous low. So there's not really much in the way of support now until we kind of get into this cluster of support down near 70 cents even. So just to keep that in mind. One of the reasons this is happening is the the Canadian economy numbers are not performing quite as well. There is some talk about the U.S. lowering rates. I think Powell kind of prepared the market today or left the door open for Fed rate cuts in a speech today, which in theory, weakens the U.S. dollar and strengthens the Canadian, all other things equal. But we're still seeing a bit of an exodus of the Canadian dollar value to the U.S. dollar. That's not all bad, though. We're looking at wheat basis at this point in time. We are seeing, close to some of the recent highs in wheat basis. What this does is it kind of keeps the cash market in some kind of range where farmers feel that it's worth selling, I think. So in order to get to those numbers, whether that's $7 in Western or in Alberta, kind of 675 in Saskatchewan, maybe 650 in Manitoba, whatever those levels are, I think that's where it does kind of incentivize some farmers to sell. So as the futures kind of fade, the basis has to make up the difference, and I think that it shows it in this chart, in the basis chart, where we're seeing, some of the best basis we've seen since late spring for the December delivery period. Let's look at wheat now. Here's the HRW, or the Kansas wheat market. It did make a new low today. That is a bit of a concern, but rallied back after that, and as we said, closed pretty strong today. We do want to see it kind of trade above, close above even that 20-day moving average, it's had a hard time doing that for the last few months or all the way through summer and so far this fall. We continue to feel that, this market will bottom and we will see something in the short term, a bit of a relief rally. I think that will be worth selling into if you if you need to do that. There's also big carries in this wheat market. We're having some conversations with our customers about that at this point, and how to take advantage of that, and even take advantage of that when the market starts to turn over. Soybeans continue to struggle this morning or today. There's still a lot of trade news that is not really great for the soybeans. The Chinese trade row continues to kind of deepen. It looked really, looked like there was some optimism uh, in the uh, in the previous week, but last week we saw some escalation of tensions, and then as we rolled into this week, we also see some escalation of tensions, including some port fees, where both countries are starting to charge each other port fees, and China wanted to announce a major expansion of its rare earths export controls, which threatened, some of the economic activity in the U.S. As a result, Trump retaliated with a threat of 100% tariffs on top of the 30% that are currently on. That would bring it up to 30%. And I feel like the media feels like there is going to be continued um, degradation of the trade talks up until the end of the month in Seoul. And what we're reading now is that soybeans are not necessarily top of mind for that trade discussion, and that a lot of these other things are taking precedence. So I think the market is losing confidence that soybeans are going to be that there's going to be a solution to the soybean issue by the end of October, beginning of November. Kind of moving that into canola. Canola had a positive day today. It did break above the 20-day moving average and tested the high of the channel here. Now, this is the November contract. We've been talking about the November contract for quite a while. The open interest still favors the November contract, but the volume, as of recently, has moved to the January contract. We will see, obviously, the November contract fade and the January contract become the front month. So at some point, this January contract is going to become, some point very soon, this January contract is going to become the most important one. And as you can see here, we're actually seeing some positive um, technical signals here as far as a break and a move above the 20-day moving average, although it's not very strong move. We also saw a move above that channel resistance today as well. So the two charts, November and January, look a little bit different. And because January is growing in influence, I think it's worth looking at this point for some technical signals. I saw this article about the cash advance, the canola cash advance today from on Real Agriculture. The article kind of focused on the savings that the farmers would be receiving from the zero interest loan, or cash advance, I guess. They moved the interest free portion from $100,000 to $500,000 or $500,000, which, even this headline shows it may projected to be worth only, like they threw that word only in there, $35 million. Now, I think they're kind of missing the mark on this, because I don't think the value in the cash advance necessarily is in the interest savings. Now, that's a little bit of a positive bonus to the cash advance, that it's no interest for $500,000. But I actually feel that the benefit in the cash advance is that it provides farmers with an alternative to having to sell grain in order to get cash flow at this time of year. Now, that's a very important point, because if we can defer the cash flow needs into the future, then we don't have to be price takers during this harvest pressure period. It gives a lot of flexibility to farmers to maybe capture the carry that's in the market right now and sell deferred if the risk management strategy would allow for that. Or even it allows those who have some good sales on the books pre-harvest to wait it out a little bit as we move through the harvest pressure. So that's what I see the benefit in the cash advance by the canola growers. I don't necessarily see the benefit, or the sole benefit, as being the interest savings. So I hope that I know that there's a lot of our clients who are using this program. I mean, who wouldn't want $500,000 of free money anyway? Even if um, even if that wasn't needed on an acute basis, I think it's worth doing, because it gives you a heck of a lot more flexibility on how you market your canola this year. Um, Another interesting thing, and this isn't directly related to canola, but Trump is kind of mulling the end of trade ties with China in relation to cooking oil. Um, the U.S. buys quite a bit of cooking oil from China, and they're looking at reducing or eliminating the amount as a result of the trade issues that we're having now. It's possible that the soybeans that are not being sold to China at this point will be able to get crushed and sold as cooking oil into the US market. But I think it also opens up an opportunity for Canadian cooking oil to enter the market as well. So that might be a good thing for our canola market, although it's kind of a backwards way to look at it or a roundabout way to look at it. But I think that it is more of a positive for our Canadian farm industry than it is a negative if the flow of cooking oil were to be reduced coming from China to the US. Just wanted to kind of point out corn here as well. We're kind of seeing corn break down below some support today. This previous low here just in September at about 410 or so is still kind of holding, but we did see it trade below that today. So a little bit of a concern. It does feel like harvest pressure is starting to mount and that we're going to see a bit of a change in this particularly upward kind of momentum that it had. It definitely looks like it's breaking down below some of those. Some of those previous highs and some of that 415 or so support. So I think that's worthy of a watch out for corn here if you are corn. And then moving to cattle, which is kind of the positive note for the day. Cattle continues to rally, and we made new highs in both the December live cattle as well as the feeder cattle market. I'll show that chart in a moment. But again, I almost or I even mentioned that, hey, the cattle rally may be over after the peaks at the end of August. Obviously, that would have been a wrong statement. It's rallied back again. Screwworm is a problem in Mexico, meaning less cattle are moving up from the border, and we see these markets continuing to make new highs. Feeder cattle looks just unbelievable at this point. That is all we have for you today. Thank you for joining us. We hope that you had a great day, and we'll see you again tomorrow.